Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be looking at a very alternative way of how to measure where we are heading at the end of this bull market. At the end of the day, nobody knows where the end of the bull market is going to be, but there are techniques to give us a ballpark figure of how this bull market is going to end. Many people have been asking me for many weeks now about what are the ratio trades and how do they work. This is what we do in the private member section. So today I'm going to give you a detailed view of how they work, and of course I'll be having a look at the 60-day cycle to see exactly where Bitcoin is heading in the next few days and weeks. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, I'm going to start off with one of the techniques used to measure where we can end up with at the end of this bull market. And in the last few weeks, as you know, I've been giving you some figures, some ways, some different ideas of what the end price target might be based on various indicators. So in the last video, I showed you that the minimum Bitcoin price should be around about the 265 based on the pre-halving and the post-halving price actions. Today I'm going to look at a different way and to give you a ballpark area of where this price may end at the end of this bull market. So I'm going to stay here on the default chart and show you a technique called the one-to-one extension, but I'm going to apply it to the 4-year cycles here. And I'm going to start off with this first cycle, and what I want to show you is that if you look at where the halvings are, these red dotted lines, and you'll notice that after the halving you get one major correction to try and shake everybody out before the big move. So here, after the halving, you got one big correction here, which wasn't that great, not as big as this one here. Then the market ended with a flurry here. And this is what everybody was expecting at this point. We went from the halving to this point, we had this correction, so this should have been the bounce for the next level, just like over here. But this did not materialize, and many people put that down to the China ban at this point, which stifled the market, and we went into a 12-month bear market. So just based on that one-to-one extension, we get some sort of a ballpark figure over here of where the end of the bull market is going to be. And to do that, we're going to use a one-to-one extension from the halving here. If you put a line up to the first top before the correction, and then you take that from the low of the correction, which is this point here, this candle, if you line it up, you can see that the amount of increase from the halving to its first top is very similar from the correction to the next top. So this is what happened in the first cycle. And if you go to the second cycle, very similar things happened from the halving here to that particular correction there. And remember, this is a monthly chart, so these corrections aren't just a little correction. Then if you take that from the bottom of that correction, and you can see that it ends virtually about the same time as the actual top. And this tells you that in the last cycle of why this was an oddball end to the market. Yes, we do have double tops, and these double tops are like a curveball that the market throws in order for these patterns to not work out. So from the halving here to that 64,000, if you take that to the bottom of that correction, then the end result was expected to be around about here, around 220, 230. That would have been a more accurate picture with this particular cycle, but we know what's happened here. But what we can do is use this technique to give us a ballpark figure here now. So if we move this chart a little bit to the left, what we want to know is that from the halving where we are, where is this going to go? So what we need to do is to look at exactly when we break out from this neckline, we're at the halving now, where the top is going to be and where the correction is going to come from. And wherever that correction ends, we should reapply this here, and that will take us to the top of that bull market. So while we're at the halving here, what we're waiting for is the next move up. So I'm going to measure that next move up by looking at what's happened with the Bitcoin price since we bottomed out at 15,400. Because this one-to-one extension has been playing out since the end of 2022. And that will give us an idea of where this is going to be from where we are now at the halving to the next top. So this is the weekly chart. From the bottom here, 15,400, if we take the extension to the top here, which was a $30,000 neckline at this point here, and then obviously we've had two corrections of 20%. And if we take that extension there to this correction bottom here, you can see that that predicted this rise all the way up to this level here. You can see with this candle, which was at the high of about 49,000. So this move here has predicted that move there. So if we now take this extension, to the bottom of here, the correction that we got at around 20%, and extend that, that takes us to about 76,000, and we topped out at 74,000 here. So we can see that that $74,000 move was predicted by this particular move down here. So similarly, in order to get this figure, what we've got is we've had this correction. So as long as this 56,000 is the bottom of this correction, which with all intents and purposes of having a look at these candlestick patterns and the levels over the last 3 months, it looks highly likely that that's the case, especially when you've got this on the weekly chart. You've got this big long wick at the bottom, which is a rejection of lower prices. So if we put that extension at the bottom of that, so from the correction at 56,000, what this one-to-one extension is doing is giving us a ballpark figure that the next point of where the consolidation may well come for Bitcoin is going to be in this ballpark figure here, from around about the 112. If we measure these moves, and we know that these moves so far have given us a 20% correction all along here on a few occasions now. So this is a pattern that's been developing, and currently we had about a 23% correction. So if we call it a 20% correction at this point, so just to review so we're not getting confused, we've had this correction of 23% down to 56,000. We've taken that extension based on the previous historical perspective. It's not my opinion, it's just what the charts have been telling us, and I'm just deducing that information for everybody here to give us some sort of a ballpark figure of where it's going to go. So what this extension is telling us here is that this price is going to go into the ballpark figure of about 112, 113. And if we measure 20% fall from there, that takes it down to 90,000. So just on that measure, from 112 down to 90,000, that gives us a range that's coming up over the next few months. So once we break out of this neckline at the $73,000, then based on what the charts have been telling us since the end of the bear market in 2022, this area seems to be the one that will be the most likely. In terms of probability, this may well be about 50-50, but in the absence of other indicators, this is giving us a very good idea of what to look out for. And if we do this extension from the bottom of this correction, which will be around about 90,000 according to this chart, then the end figure, just based on this, remember these are rough estimates, but it's the pattern I'm looking at. So we're getting these patterns that we get an extension. So according to this method, we should get a ballpark figure of about 180,000. And I've got these orange lines drawn here, and these are the Fibonacci levels that I've had a look at in the past. So if we zoom out, we can have a look at exactly what this orange line is, because there seems to be a confluence with this particular level on the Fibonacci. So if we do a Fibonacci retracement from the 69,000 down to the 15,400, this is the 1.618, and I mentioned this last week in the last video when I covered the possible targets here. So this is in line with the 1.618, and we need to take heed of that. The minimum that we came to in the last video was 265 based on a different measure. So what we've now got is a possibility on two different measures, and depending on how the price action goes along this way, we will know in advance based on the price action where the Bitcoin price may well top out. So our two targets last week were 530,000 at the 2.36 level, which two of the previous three cycles ended up at, and one of them at 1.618. So the methods I used last time were giving us this figure, and this method is giving us this figure. So once again, it's telling us that these two are the critical levels to look out for here. So coming back to our default chart on the monthly time frame, based on the measure that I've done from here at the bottom of the bear market to the halving, then the 180 at the bottom of this box is where we're heading. Whether that's at the end of 2024, which would mean a left translated cycle, which is what this move here, the price coming up to the all-time high before the halving, which it hasn't done before, or whether we're still going to go into next year. So only time will tell. I just thought this was a very nice technique to use, which nobody seems to have used out there, I haven't seen anybody use this one-to-one extension on the 4-year cycles, but it gives us some sort of an idea of where we're heading. And it was really a continuation of the theme that I started in the last video to see where the end of the bull market will be. And in case you're wondering why I'm looking at the end of the bull market in different ways, it comes back to this quotation which you can use in every aspect of your life. And that is that if you change the way you look at things, then the things that you look at also change. This is very important. Sometimes you can have a myopic view of something, and based on that you make a judgment call, whatever it is. If we take the example of health and fitness, why is it that in the new year there's a huge numbers of people who say, right, from now on, at this point in time, i.e. the 1st of January, I'm going to improve my health. I'm going to eat healthier. I'm going to go to the gym and work out and become more fitter. I'm going to have a different relationship with my family. I'm going to have a career change. So all these things happen in all aspects of our lives here. And what happens in reality is that within a few weeks, we give up on our health, we give up on our family, we give up on our career ambitions for whatever reason. So what this quotation really does is saying to ourselves that try and change the way you look at these things about your career, about your finance, about your family, even your attitude. So when you change the way you look at things, then these things, such as your career, such as your health, such as your family, such as your relationships, etc., then these things also change. So maybe look at these things from a completely different angle. And this is what I'm trying to do, because we all want to know what the end price of Bitcoin will be. We want to know where we're going to end up on this path, on this journey that I've been mentioning for many, many weeks and months now. We're on this journey, we're halfway there. We've got 6 to 12 months to go. And I'm trying to look at this end view here from a different angle every time. So when we change the way we look at things, then maybe the things that we look at also change. So I hope you found that interesting. Okay, I'm going to move on to the ratio trades and how they work, and then show you exactly the results that we've had so far in the private member section that we run here at Wisdom Bites. So first of all, ratio trades were really created as a safe method of trading. And my own portfolio, which I've mentioned many times before, I tend to take a 4-year cycle view. So I managed to get in at the end of 2022 with the Bitcoin miners. I don't have Bitcoins. I only invest in the Bitcoin miners. And instead of having a holding strategy, a passive portfolio, I was looking at a safe way of trading between the miners, which didn't involve holding cash on the side, waiting for a price to come back down. Because many times, as we've noticed, if you've been in this space long enough, that when you actually sell, thinking it's a local top, instead of coming back down and allowing you to buy back at a lower price, many times the price goes against you and keeps going up, and then you have to buy back at a higher price. So I created this ratio method so you can move between miners at the appropriate times based on the charts that we've got here. So if I give you an example, this is the chart between Marathon, which are these candles as you can see, and then the blue line is the comparator chart for CleanSpark. So what you're doing here is looking at the movement of Marathon against the CleanSpark price. And one thing you'll notice is that at many times the price between the two is very narrow, and sometimes the price between the two is very wide. And this happens time and time again. As you can see, it's very narrow here and it's very wide here. And when you look at these patterns with a good amount of probability, you can see that whenever it comes to these levels here, the differences start to appear. And this is how you do the ratio trades. So when the price came here, i.e. both were about the same price, because Marathon Digital Holdings is a bigger company with more Bitcoins in its custody, etc., etc., it looked highly probable that it's going to move further away from CleanSpark. And because CleanSpark also has been growing very fast, we know that that's going to come back again as well. So these two assets are weaving between each other. And the secret is to make sure we know what's happening with Marathon and what's happening with CleanSpark. Because if we know that CleanSpark is going to get ahead of Marathon for whatever reason in terms of their expansion, just like over here, it moved very, very fast against Marathon. We need to be aware of that, and we take that into account to know relative to the other price where it's going to move. And the reason why this is a very safe way of trading is really for those people who prefer a passive portfolio because they don't like the dangers of trading, because at no point are you holding any cash. Then generally speaking, even if the ratio doesn't work out, both are still going at the same time. The rate might be different, but they're still both going up at the same time. So those who look for a local top and then wait for the price to come back down, And when it's down here, you're expecting it to come down further, but then it goes against you here, and then you have to buy back anywhere along this point. It saves you from that anxiety and the headache, the bad feeling in your stomach when you have to do that. And how that manifests into the trades, and we can see this, that with January alone, and to the recent trades we've done a few days ago, we've managed to increase our units by these amounts along the way, just by doing this kind of thing, by ratio trades between one to the other. So like these ones are between Marathon and Cypher. These trades are between Riot and Cypher. This one is between Marathon and CleanSpark, etc. So this is what we do in the private members section as part of our focus on the Bitcoin miners. So how that's manifested within the portfolios is that we started the Bitcoin miners portfolio back on the 6th of January when we started the private member section here. And from a start of $100,000 starting capital, we ended the year at 434,000 just by focusing on these Bitcoin miners here. So what we've done is to make a comparison that if we took this amount of money and put it into a passive portfolio, how much would it grow to by the end of this bull market? But a similar amount we did for the trading portfolio, which is where we do the ratio trades. And so far, up to today, the passive portfolio has gone to £395,000, and this is after a 50% correction that we've had with the Bitcoin miners. So with our passive portfolio, that's 9% down on the year, considering that we've been mostly in a downtrend since the beginning of the year. However, the trading portfolio with the ratio trades, if you look at the number of units here, and look at the number of units we've made by doing ratio trades, you'll see that that has now grown to 531,000. So while the markets have been down, our trading portfolio, based on very simple, safe method way of trading, that portfolio is up 22%. And when you're carrying more units, as the price goes up, they're obviously going to be worth a lot more. So we do expect the differential between the passive portfolio and the trading portfolio to be going up. And our current target is $5 million at the end of this bull market, wherever that's going to be. And our expectation is that the Bitcoin miners are on a leverage play against the Bitcoin price. So our end target is based on about 5 to 10x. And a 10x of this would give us 5.3 million. So we should be able to achieve that target. And even if you get to 4 million or 3 million, I don't think anybody is going to be complaining about that. And if you want to join us on that journey with the portfolios, with the ratio trades, etc., all you have to do is click the join button here below any of my videos, as well as there is another button here in case you're on a handheld device. If you go into the description box, there's also another button here to join, and when you click on that, for the price of a Snickers bar per day or a coffee per week, whichever you fancy, we give you lots of choices here at Wisdom Bites, but at £12.99 per month you'll have access to all the ratio trades currently as well as in the future. And every single day, Monday to Friday, on the trading days, we do these market updates here to make sure everybody's updated with the Bitcoin miners and Bitcoin as well. Quickly moving on to the wider markets, we can see there's a lot of changes going on in the background of Bitcoin, and why Bitcoin has a very good opportunity to break the all-time high of $74,000 in the next coming days and weeks. What we've got here is that the Bitcoin ETFs are now having record shockingly high inflows. And if we scroll down here, we'll see how much money is coming into the inflows now. Just this Tuesday, we had a staggering $887 million worth of net inflows. And that was the second biggest single day since the start of the trading in January. And if we have a look at the Bitcoin liquidation heat map, while there are leveraged longs down here at 70,200, so the price may well come back down to the 70,200 to take these out. But what's important is that as we are rising more and more closer to the all-time high, we have a lot of shorts here who are very likely to get wrecked once we break the $73,000 to the upside. So these are the ones who are going to get left behind, who are trying to short the market. And this is what Bitcoin does. And they're probably not aware that the market is about to go higher. And if we look at the Apollo Bitcoin tracker in terms of the number of Bitcoins held by the various ETFs, we know that BlackRock has flipped over Grayscale and is now powering ahead. So they're now holding 297,000 Bitcoins, 12,000 more than Grayscale, who started off at 619,000. So while they've been bleeding down, BlackRock has been absorbing most of that. And Fidelity is now coming up very strong with 173,000. So sooner or later, they're also going to flip over the grayscale amount. And with grayscale having lost more than half already, it's only a matter of time before the bleeding gets to the point where they have no effect on the supply. And as I just showed you, with the record inflows into these ETFs, if we have a look at the Bitcoin ETF overview, we can see quite clearly we're getting it more and more into the greens again here. But look at the amounts, with BlackRock now taking over as the #1 spot for the number of Bitcoins in its ETFs. Over the last 7 days, what we've got is 6,484 coming in as opposed to only 1,984 going out. And as we've seen with Fidelity, they're also increasing at a rapid rate, along with ARK at 829. So the sea change is going more and more towards more inflows and less outflows. And I just want to show you why the Bitcoin chart is looking incredibly bullish. When we go to the monthly chart, we see that at the previous all-time high of 69,000, what we're coming up to now is an incredible amount of bullish consolidation going on at the top of that trend. So when you see a big trend to the upside, and the consolidation is happening at the top third, i.e. the upper third of this trend, this is a very bullish sign that this is a continuation pattern to the upside. And many people have been asking me to have a look at this 2-month candle for Bitcoin. And while that is a bearish signal, it is really one signal, one indicator amongst many others which are positive. And you really can't take one signal and base your narrative based on that. So at any one time, you're always going to get bullish factors and bearish factors. And while we need to be aware of this, and yes, the market can still come down, but the pressure of the ETFs, the fall of the supply since the halving, and many other factors like the institutions are now more involved due to the legitimization of this crypto space, then on balance, it looks like we're more likely to go up than to go down. And for many weeks, I've been mentioning this stochastic RSI, this indicator down here at the bottom, that whenever we move above the 20 line with both these indicators, just like over here, we tend to get these big rallies to the upside. So this is what we've been waiting for, to get these big moves. And just in the last couple of weeks, we've got our confirmation. So this looks like, with a high degree of probability, that sooner or later this is going to break to the upside for the rally that we're expecting here. And as I've been mentioning over the last many videos now, we've got this inverse head and shoulders now developing. And in the last video that we did, we were waiting for the completion of this right shoulder here. So what we've got so far is a left shoulder, the head, and now we've got the formation of the right shoulder. And the only question is whether this is going to be an extended shoulder here with a consolidation around this neckline, around the 70,000, or whether we're going to burst through straight away. And that's the choice we've really got. For the longevity of this bull market, as well as the consolidation and the end price being higher, if we could consolidate for another month or two, but the market may not give us that, so we've just got to be prepared for whatever the market wants to give us. But certainly we've now formed this left shoulder and the right shoulder and the head, and we've got the makings of a big move to the upside. And the 60-day cycle, which ends here at the end of June, we can see that we're coming up to the highest point before the midpoint, so we could well easily make a right translated cycle here, as there is plenty of room for it to go at the moment. So the overall conclusion is that the narrative is very bullish, all the way from the monthly chart to the stochastic RSI, as well as the inverse head and shoulders. And to confirm all that, the ETF inflows are now increasing by large amounts. So it looks with all probability that the push to the upside is now gathering pace. And only time will tell where we get to. But certainly the picture is looking a lot more bullish now than it did in March when we had this correction here. Okay, so we're going to leave it there. I hope you found value in the video. If you did, then please remember to like and to subscribe if you haven't already done so. And if you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.